The global stablecoin market has matured rapidly, and Australia is no longer watching from the sidelines. From ASX-listed fintechs to the big four banks and a new wave of licensed issuers, the race to own the digital Australian dollar is well and truly underway. Here's a clear-eyed look at where things stand. What is a stablecoin and why does it matter? The basics of stablecoin is a digital token pegged one-to-one to a fiat currency, in this case, the Australian dollar. Unlike Bitcoin or Ethereum, its value does not fluctuate. That stability makes it genuinely useful. For cross-border payments, DeFi applications, programmable money, real-time settlement, and tokenized assets, the opportunity, the global stablecoin market is currently valued in the hundreds of billions. In Australia, the opportunity is still early, but the infrastructure is being built fast. The question is no longer whether AUD stablecoins will exist, it is which ones will win. The regulatory shift that changed everything ASIC opens the door for years. The biggest barrier to stablecoin adoption in Australia was regulatory ambiguity. That changed in 2025. ASICs corporations, stablecoin distribution exemption. Instrument 2025-631, effective September 2025 and running until June 2028, cleared the path for intermediaries, exchanges, brokers, platforms to distribute stablecoins from licensed issuers without needing to obtain their own Australian Financial Services, AFS, market, or clearing and settlement licenses. In plain terms, the rails got a lot easier to build on. The classification that matters, ASIC, clarified in Info 225 that stablecoins are generally classified as non-cash payment facilities, NCPFs, placing them squarely within the existing financial services regulatory framework. That gives issuers a clear compliance path and gives institutional players the confidence to engage analysts. Estimate the broader digital asset reforms could unlock up to $24 billion in productivity gains for the Australian economy. Novati, ASX, NAV, the ASX's stablecoin bet a quiet accumulator. The most direct way to get stablecoin exposure on the ASX today is through Novati Group, ASX NAV, a Melbourne-based payments company that has quietly built one of the most compelling stablecoin positions in the country. Novati holds approximately 45 to 57% of AUDC, the entity that issues AUDD, Australia's leading AUD-backed stablecoin. The numbers, the traction speaks for itself. AUDD surpassed $1.4 billion in payments volume on the Stellar blockchain. In January 2026, AUDD was listed on Coinbase's global retail platform in September 2025. The first Australian dollar stablecoin to reach that milestone, AUDC raised $5 million in a pre-series round at 0.8 ZAU per share in 2025, valuing Novati's interest at approximately $16 million. In February 2026, ASIC granted AUDC an Australian Financial Services License, AFSL, formally, recognizing it as a regulated non-cash payment facility issuer beyond payments. AUDD runs on multiple blockchains, including Stellar and XRP Ledger, making it one of the most interoperable AUD stablecoins available. Novati has also participated in the Reserve Bank of Australia's CBDC pilot program with the Digital Finance Cooperative Research Centre, issuing a supplementary stablecoin called AUDU-DAS as part of the research exercise. That kind of regulatory proximity reflects years of deliberate positioning. For ASX investors wanting exposure to the stablecoin theme without betting on a pure-play crypto startup, Novati remains the clearest vehicle. Macropod and AUDM, the institutional-grade challenger Australia's first stablecoin license, September 2025, marked a turning point. ASIC granted Australia's first standalone stablecoin license to Macropod, a company founded by ex-NAB bankers and backed by Mark Carnegie's MHC Digital Group. Macropod's stablecoin AUDM launched in October 2025. It is issued one against Australian dollars held in segregated trust accounts at one of the big four banks. Backed by seasoned banking infrastructure and a formal AFSL, AUDM is positioning itself as the institutional-grade option. Who it is built for Carnegie has described AUDM as what institutions have been waiting for. And that framing is deliberate. AUDM is not trying to compete with consumer-facing crypto products. It is targeting settlement infrastructure, tokenized assets, and wholesale financial markets. Macropod is currently privately held, but its success or failure will shape the regulatory and commercial template for every stablecoin issuer that follows. The big banks, early movers, cautious builders, ANZ. First off, the blocks ANZ, ASX ANZ, became the first Australian bank to mint an AUD-backed stablecoin when it created a DC in March 2022, primarily to facilitate a client's purchase of tokenized assets on-chain. It remains largely a wholesale instrument. NAB, the second mover NAB, ASX NAB, followed in early 2023 with AUDN issued on the Ethereum blockchain. NAB executed what it described as a world-first institutional stablecoin transaction, a cross-border payment settled in real time. Like ANZ and AND has been careful to position AUDN as an institutional tool, not a retail product. What the banks are really signaling, both institutions have made clear they are not endorsing retail crypto speculation, but their willingness to build stablecoin infrastructure signals an important shift. Australia's largest financial institutions no longer view digital dollars as a fringe experiment. They are building for the future they expect to arrive. Block Inc., ASX SQ2, the global wildcard Block Inc., listed on the ASX under the ticker SQ2 via KES Depositary Interests, is not an AUD stablecoin issuer, but its global stablecoin adjacent activity across Cash App, Bitcoin infrastructure, and payment rails means it benefits directly from regulatory clarity that accelerates stablecoin adoption in markets like Australia. For ASX investors, SQ2 offers indirect exposure to the broader digital payments thesis that stablecoins are accelerating. Why Solana is positioned to win the performance case if you had to bet on one blockchain to dominate the AUD stablecoin and tokenized asset space over the next 5 years. The case for Solana is hard to ignore. Solana processes thousands of transactions per second with finality in under a second and fees that are fractions of a cent. For a stablecoin to be genuinely useful in everyday payments, not just institutional settlement, those numbers matter enormously. High fees and slow confirmation times killed Ethereum-based payment products for mass adoption. Solana was built for exactly the use case stablecoins demand. The ecosystem case USDC on Solana has grown to become one of the largest stablecoin pools in the world, with billions in daily volume. Solana's DeFi ecosystem, including Jupiter, Camino, Drift, and Orca, has built deep liquidity infrastructure that any AUD stablecoin issuer would want to plug into. With Solana's mobile-first strategy and growing consumer wallet adoption, the on-ramps for everyday Australians to hold and use AUD stablecoins are getting easier by the month. The bottom line for Australian stablecoin issuers, Solana represents the most viable path from niche utility product to mainstream payments rail. Tokenized stocks on Solana, the 24/7 market beyond payments. Here's where the stablecoin story gets genuinely exciting for Australian investors. Stablecoins are not just a payments tool. They are the settlement layer for an entirely new kind of financial market, one that does not close at 4 p.m. on a Friday. Already live platforms like stocksonsolana.com are already making this real. The site tracks over 251 tokenized stocks available on Solana right now, including shares of major companies issued via XStocks, Ondo, and Prestocks protocols. These are real equity exposures, tradable on-chain 24 hours a day, 7 days a week. What this means for Aussie investors, think about what that means in practice. Shares in companies that currently only trade during ASX hours, now accessible around the clock, trades settled in seconds, not T+2, no broker required, no 4 p.m. cutoff. The infrastructure for this already exists on Solana. What has been missing is the AUD stablecoin layer to make it native for Australian users. As AUDDM and other regulated AUD stablecoins mature, the bridge between Australian investors and 24/7 tokenized equity markets becomes dramatically shorter. This is not a distant future, it is being built right now. What's next? An inflection point. Australia is at an inflection point. The regulatory framework is in place, licensed issuers are operating, the Big Four are in the market, ASX-listed companies are accumulating positions, and Solana is quietly becoming the infrastructure layer underneath all of it. The open questions, the remaining questions are commercial. Which stablecoin achieves the network effects needed to dominate consumer adoption? Will the banks move from wholesale to retail? Will AUD Coinbase listing translate into genuine global liquidity? The answers will be written over the next 2 to 3 years, but the foundations, regulatory, technical, and institutional, are now firmly in place. Australia is not late to stablecoins. It's exactly on time. This article is for informational purposes only and does not constitute financial advice. Always do your own research before making investment decisions.